Welcome back. Joined by Ashi Anand, founder and CEO at IME Capital, and he's joining us this afternoon to give us his views. Ashi, this rally in metals that we're seeing, if I can call it that, at least today, but even when we look at the last 12 months, metals have been outperformers. Now, whether you call it base metals, whether you look at the steel pack, all of them have outperformed in significant fashion. If I even look at Tata Steel over the last 12 months, it's done very, very well for itself. And Nifty 50 counter, not a base metal either, not linked to a copper, not linked to some of the others. Your sense with regard to the rally in metals and whether that's sustainable or not?
Yeah, sure. So actually, metals is really quite broad, right? And you really need to kind of break up kind of metals into precious metals, some of the base metals, and even within base metals, kind of there are different underlying kind of demand drivers for steel, for zinc, for copper, etc. So just kind of looking at each of these independently, I think what you have seen in the precious metals pack, and this is kind of gold and silver, where you have seen substantial up moves and were probably the big outperformers in terms of an asset class last year. This has really moved up largely on account of kind of geopolitical kind of concerns. And I think a very large amount of this move does appear to be done. In any very strong bull market, it is always very difficult to kind of call the top of a bull market. And some of the underlying kind of demand drivers as geopolitical kind of concerns, the fact that central banks are wanting to kind of increase gold holdings to de-risk away from the dollar, the fact that there is increased investor appetite. Very often towards the end of a bull market, you don't really see as in you still see very strong demand tailwinds. So I kind of like on gold and silver, we are aware that there is extremely strong momentum, but we are kind of a bit more cautious because you've already seen a very large part of the move. So I kind of gold, silver, you're a lot more cautious out there. When it kind of comes to metals, we are a little more positive on certain materials that go into kind of electronics and electricals. So things like copper, some amount, to some extent, aluminium, zinc at some level. What you are seeing is very, very strong AI capex that is going to come in over the next decade. And for a number of these metals, there is an incremental kind of a driver that this is adding, and they are kind of supportive of AI capex is kind of quite supportive of incremental demand generation out here. Not all metals are as kind of favorably positioned there, and which is where you need to look at them individually, as well as there are certain very important underlying kind of supply dynamics. Copper has seen very significant mine shutdowns, which has led to this very sharp rally that you've seen. As those mines come back, you should see kind of copper settle down a bit. So kind of we are a bit more positive on this set of metals where there is this longer term AI kind of demand driven growth. Steel is something we are a bit more cautious about. Steel it's still very infra or kind of auto or consumer goods or housing kind of driven. The biggest market, which is China, you aren't seeing very strong demand growth drivers coming in from there. Now, until you don't get a lot more positive about the Chinese economy, we kind of see steel have a bit more of a cautious view on the steel pack.
Okay, so that's the take, in fact, coming with regard to metals. Thanks for that, Ashi. I wonder, Ashi, if you also have a view with regard to IT, because that's the pack which will be in focus on the back of earnings. And you have a very keen eye on ground with regard to technology as a whole. I wonder how you're seeing the entire evolution of the IT space as AI kicks in a more significant fashion and is more broad-based now. How should the IT companies actually catch up? Who will the differentiators be? Who will the winners be? How should one identify that?
Okay, sure. So let's first differentiate IT very clearly into very distinct segments. One, you have digital platforms or tech plays, which are actually apps or platforms that have been created for the Indian consumer. This, as you'll be well aware, we've discussed this multiple times in the channel. We believe that this is the theme for the decade. We have a fund which focuses exclusively on the space. This was launched in February 23, done incredibly well since then. But we still believe that we're still in early stages of this larger structural move. This decade is likely to see sustained kind of value migration away from traditional businesses towards new age digital tech firms. And as kind of these companies continue to scale, we also see profitability and cash flows improving substantially. And this combination of kind of growth as well as kind of improved profitability is really a very, very strong recipe for value creation, and which is what makes us so bullish on the digital tech space. Now, if you're looking at IT services, that is actually quite a different story. IT services being the traditional IT companies like your Infosys and TCS, which are servicing global IT demand. Out here, there are two or three factors which are all quite important to look at. In the near term is firstly what's happening in terms of a demand recovery coming in from the US. Tech spends or IT spends from the US have been fairly weak over the last couple of years. You are expecting to see kind of an improvement as the economy starts to kind of come back. So that is kind of the key near-term driver. However, the moment you're looking at IT services, understanding the impact IT AI is going to have in the space is very, very important. There are two key impacts. Firstly, as kind of AI becomes a bit more mainstream, we are expecting fairly large enterprise-wide AI kind of projects coming in, where larger enterprises are trying to incorporate AI into their overall kind of tech stack. We see Indian IT companies being very well positioned here, and as you go into FY27 and 28, this should be quite an important, interesting incremental kind of demand driver. You're still probably 2 to 3 quarters away from this being substantial, but we clearly see this as an interesting tailwind. On the other hand, AI is also going to be used quite substantially by these companies in order to increase the productivity of their labor force.
Right.
Now, this, because they need to pass on some of these cost benefits to the clients, this is likely to have a deflationary impact. You're therefore likely to see revenues possibly not grow as much, but improvement in margins.
Sure.
And therefore, profitability should be decent.
Sure. Okay. All right, Ashi. We'll pause there. Ashi, within the IT basket, how would you play traditional IT?
So I think the main thing is, firstly, we do need to see the results. I think as important as the actual results are going to be what management commentary is. We kind of prefer, just given where valuations are, we see a lot of value in the mainstream large cap IT. So both Infi and TCS are both very, very attractively valued. We are aware that mid-size IT may have higher growth potential, but from a value perspective, we find both Infi and TCS very compelling. I think the other element around traditional IT services is the whole ER&D space, which has been under pressure for the last couple of years because of kind of just slightly weakness, some amount of weakness in even kind of EV ER&D demand. Unlike traditional IT services where levels of penetration is a lot more, I think there's a multi-year penetration story that is to play out in ER&D services. And therefore, from a slightly longer term perspective, we find ER&D a little more attractive than traditional IT.
Okay. ER&D. Ashi, I wonder how you play some of the hard infrastructure names. Would you play through prefabricated infrastructure like an Interarch? Would you play it through maybe a different manner of playing it? How would you play hard infrastructure and how would you play real estate? Give us a sense of that.
A little more positive on real estate over hard infra. I think on hard infra, one important element to understand is that the government is shifting a little focus back towards revenue expenditure. What you did see over FY23 and FY24 is kind of capex significantly kind of outpaced revenue expenditure. But post kind of the last general elections, you have seen the government starting to kind of prioritize consumption and kind of pleasing the consumer a bit more. Now, in an environment where kind of you've had income tax cuts, you've had GST cuts, etc., we're not sure on the sheer quantum of kind of growth that you're going to be getting off an already high base in hard infra, and which is why we are not as optimistic here as, say, we were a couple of years ago. On real estate, while the stocks have also moved up quite substantially from effectively their lows, we do believe that you're still kind of somewhere in the mid of possibly a multi-year growth revival cycle. You have multiple underlying kind of strong demand trends. You have kind of consumer demand. You have a shift away from unorganized to organized. COVID has actually led to much higher aspirations in terms of the quality of houses that people want. And all of this is kind of playing out quite favorably in favor of listed real estate companies. So I think real estate is kind of our favored way to play the kind of overall fixed capital formation in the Indian economy.
Okay, all right. Ruchit, let me ask you a quick take with regard to the pharma basket. Is there a view you have there? Is there a tilt? Are there some stocks which you're keeping on your radar?
I think selective stocks can do well where there is a higher top, higher bottom structure. And one of that stock from the pharma space, which we have even recommended to our clients, is Alchem Laboratories. Irrespective of what last couple of trading sessions we witnessed a broader sell-off, we did not see any kind of selling pressure coming in this stock. And with just a minor momentum turning positive, the stock has shown a good outperformance. The stock has even touched its 52-week high today again. So price volume action seems quite bullish over here from a trading perspective. One can go long on Alchem Lab at current levels with stop loss below 5,770 for potential targets around 6,000, 6,050.
Well, thank you so much, Ruchit, as well as Ashi, for joining us. We'll let you go on that note. And as we start